FX Nation, what's up, guys? Welcome back to the channel. Welcome back to another video. And in this video here, we're going to talk about specifically trading on the edge. What it is, what it's not, how to do it. All right, so we're going to cover all that in this video, guys. So let's go ahead and jump right into it. Basically, what it is it's getting an early entry on the second leg of an M or a W. Now, this allows us definitely a lot of advantages. Number one, we're going to be using a very tight stop loss. And when you use a tight stop loss, it's going to give you very high ratios, risk to reward ratios, usually 5 to 1 or better, which is awesome for us. So, and then another aspect of this is timing is extremely important when you enter these trades. And typically the timing aspect of it happens during London or New York session, right outside of the shadow boxes. So literally like right after the London session starts or right after the New York session starts is when we typically see these. Okay, so I'm going to go ahead and go through some examples here for you, 2 examples, so I can show you what I'm talking about, and let's go ahead and break this down for you. All right, guys, so let's go ahead and talk about how this actually looks on a chart. All right, so here we have, of course, the beginning of the day, so 5 p.m. Eastern time, okay, and then here we have our Asian box, right? And so we know that, you know, obviously between the Asian range, there's going to be the initial high and low of the day. All right, now trading out of the edge, basically what it is, or really all that it is just picking out M's or W's that happen towards the end of Asian session. Okay, so you could have a situation where during the Asian session, you could have a situation where like this, something like this happens and price drops. Okay, or it could be something like this, right? And it could be the opposite way as well. The biggest point about trading the edge is that the most powerful ones are going to be when you see the M or W form within the Asian range. Definitely when you see the first leg form on the inside of the Asian range. Okay, now very important rule to trading on the edge is that if the second leg is not formed by 3:15, then it's not really trading the edge. Okay, so I want you to keep that in mind. Typically when we trade the Asian edge, we're literally talking about the trade happens right at the edge here at 2 a.m. Eastern time, or by 3 o'clock the move is happening. Okay, and that's the second leg essentially is already happening. All right, so very important that it has to happen before the 3:15 candle. Okay, so as long as it creates the M or W, the first leg within the inside of the Asian range, second leg it could be right at 2:45, 3 o'clock, boom, you're trading the edge. Okay, another thing that you will see is you will see star formations, right? So you'll see those as well develop right at like 2:15, 2:30. Okay, so you'll see like one bar here, and then you'll see something like that. You'll see the star formation at the top of London, or at the top of the Asian range, at the Asian range high. Okay, so just pretend Here's the Asian range high, and let's just pretend that's the Asian range high, okay? And then this here, let's say is the 215, 230 candle right here. Okay, if you see this develop, this star formation develop, then you're good to go. You're trading the edge. Okay, if you see railroad tracks on the second leg of an M or W at 215, 230, 3, you're good. Okay. So this is all that trading the edges is basically trade setups that happened literally right at the end of the Asian session. And typically the most powerful one, guys, are the M's and W's that happen towards the end of the session. All right, let me just show you a couple of examples, that way you can see what it actually looks like. Okay, and so couple things I want you to notice here is that we've been trending down for 2.5 days now, right? And so let's replay this and let's see how it develops. Now remember, this is starting the day here. Okay, there's one. Accumulate contracts. Accumulate contracts. Boom. Here's the second leg, railroad tracks. So you're getting this essentially. Right? Now, key to this is that you'll see here, boom. There you go. That was your trade. You see what I mean? So that was your trade right there. Here's another one. We're entering our Asian session, and I want you to notice what happens. We blew through the Asian session, okay, by 50 pips. It was about 50 pip range on the Asian session, all right? But look what happens here. 2:45, 3 o'clock. We get 3 aggressive moves straight down, and then we just stop. We literally just stop. Why would we stop there? Okay, think about it. Why would we stop there? Okay, why would we stop here? So look, we stop here. So we basically have everybody selling right now, right? We got everybody selling right now because you'll see all of the EMAs pointing down. They're telling everybody to sell, right? Here's the first leg. Accumulation, boom, comes back down. Boom, there's the second leg right there. You see that? So we came all the way down, came back up, came back down, and then we're going back up. Right? The first goal of this, when you're trading the edge, by the way, the goal is not to get 30 to 50 pips, but at least 20 pips. Okay? So the first target in this particular scenario, because the EMAs are above us, right? And we've created a W here. First one is the 50 EMA, and then second target would be the 200 EMA, but definitely the 50 EMA. So let this play out. There we go. So from here to there is about 20 pips, depending on where you got in and out of. Okay. But you see, they held that level here. They held this level from 4 to about 7 o'clock before moving up. So they were still collecting contracts, so they can get up 20 pips and then move back down again. And then what happened? They made the move, consolidated for the rest of the day. Because really the initial move was made during Asia, right? But because this move was so aggressive during Asia, they needed to collect contracts, get some money back, consolidate. Okay. Let me show you another one. Here we have start of the day. Start of Asian session here, right? Look what they do here. This is 2:15, 2:30, 2:45, 3 o'clock, 3:15. Boom. You get railroad tracks. Okay? Railroad tracks at 3 o'clock. So there's your trade entry right here. Okay? So you're entering here. Stop loss is somewhere up here. And then we're just aiming, the first thing we're aiming for is we're trying to get to at least the Asian low. Alright? So watch this happen. And it's right here. 10:15. So from here, it's about 23 pips or so. And we don't get to the Asian low until 1 o'clock or so. Okay. And remember, this is a Friday. So, but this is your trade right here. It's just back to the Asian low. Okay. That would have given you 20 pips or so. All right. So let's go ahead and look at some examples. Some other examples that I had that we have traded previously before. All right, so let's go ahead and take a look at those now. All right, guys, so here's an example here on pound JPY. We can see the Asian range, and literally 215, 230, 230, 245 candle. We get railroad tracks, boom, straight down. Okay. Next one here, Asian session. 2:15, 2:30, 3 o'clock, 3:15. I'm sorry, 2:45 and 3 o'clock candles right here. Again, railroad tracks, boom, we move up. This one here, we get the first leg of an M right at the end of Asia session. So 1:45, 2 o'clock. And then we get the second leg here right at 3:15. Boom. Here we get the star pattern here, type 2 star pattern, right at like 2:30. Here we get a quarter wood between 2:15, 2:30, 2:45. Boom. and it just leads all the way down. Here, we end up getting a type 2 setup, and essentially we get the first leg at 215, 230. They come back down, come back up, and then boom. Now, because we had basically railroad tracks right here at 215, 230, and we had previous touches, as you can see, right here, to the Asian high. You actually enter the trade here on the railroad tracks, okay? And then you just go up, 5 to 10 pips above that high there. Here we have type 2 set up with a nice W formation right out of the box, right? So 215, 230, 245, 3, boom. And we get a nice star formation as well, second leg, boom. Here we get another W where this actually has a pin bar that goes all the way down to create the low, comes back up, consolidates for 2 candles, railroad tracks, boom, we take off. This one here literally happened right at the edge, so 215 candle, we get railroad tracked, boom, go up. This one here, we ended up getting a star pattern. This was at 215, 230, 245, 3, 315 issued the middle of the star formation, and then boom, it took off. Here's another one, but this star formation happened at 215 and 230. Boom, took off. And we also could have traded on this one as well, moving back down during the US session because we got railroad tracks here as well. So here's the first example here. And as you can see, here is the line. Here is your Asian box here. And basically, as you can see, if this is 2 o'clock here at the end of the box here, we're talking literally right at the beginning of London, we have the move here. And what this does is basically creates the first leg of the W. And then here we have the second leg of the W as market makers push down to get everybody to sell, right? It creates a second leg here of the W. And then we're a buyer for the rest of the session. Okay, so again, the whole point of this is to get part of the first leg already in the Asian shadow box, in the box. And then the second leg would come out of that, right out of the gate, out of the box. Okay, let's take a look at another example here. So on this one here, we have, as you can see right here, the first leg here, and then I drew a line here so it reminds me of next time that it comes to this level. And sure enough, right after 3 o'clock, 3:30, here we have railroad tracks, and then we move all the way down again. You see this? So this right here is another example. And in reality, you could have done 2 trades on this if you were, if you were staying awake. Obviously, you could have taken the first one down and then the second one. This one here would have been a good 20 to 30 pips. Another aspect of this that we're going to talk about is the fact of when should you take profit, right? So the idea with this is you can take profit anywhere after 20 to 30 pips, okay? And it also really depends on where the EMA lines is, okay? Because typically, we like to take trades, to go to either water or mayo, right? Well, in this case, we don't have that option here because of the fact that the lines are already underneath. So we're buying up and we're getting separation from it, right? So in this kind of situation here where the lines, we can't use them as take profit markers, you would go ahead and just go with, take 20, 30 pips. Another thing that you could do also is once you get up to 20, 30 pips, move your stop loss to that 20 pip marker, and then just let it run. That way, if it does come down against you, you're guaranteed your 20 pips no matter what. Okay, so that's another way to manage the trade. Also, is just wait for it to get, let's say 30 pips, move your stop loss to 20 pips, and then let it ride. Okay, if we can't use the EMAs as markers for our take profits. If we go back to this one here, this one's a little bit different actually. We can use, water or mayo as our take profits, but you see how water and mayo are kind of running sideways on these. They're not really going, it's not like this here where we can say it's going to drop from here to here, and that's, take one, take profit one, take profit two. They're very, moving sideways here. So as long as you bring your stop loss from here and protect your 20 pips from the get-go. Okay, so with this, your stop loss is going to be anywhere between 5 to 10 pips above what you think is the high of the day or low of the day. Okay, so 5 to 10 pips. So you have a really tight stop loss, and then obviously your risk to reward ratio should easily be 5 to 1 or higher. And in this case, it would have been probably like 6 to 1, 7 to 1 on this one. Okay, so just keep that in mind. Now, just to recap this, remember, we're waiting for the second leg M or W at the high of the day or low of the day, and it has to be a session open, London or New York. Okay, so think about these as the rules, right? We're still going only, we're looking for only second leg M or W at what you perceive is going to be the high, either the high of the day or the low of the day, and it has to be at the session open. This doesn't, you can't do this at the middle of the session. Okay, it has to be at session open. Your stop loss is going to be super tight, 5 to 10 pips, and your initial take profit is 20 to 30 pips. And that's, again, depending on the EMA lines where they are. If they are stacked together, like we saw in the previous example, you're just going to go with 20 to 30 pips. And what you can do is once you're up, let's say, 30 pips, bring your stop loss down to 20 pips. That way you're guaranteed 20 pips, and you can let it ride from there on in and see how many more pips you can get in the next hour or so after that. Okay. If not, if you have the EMA lines that are separated, then of course you're aiming for water, which is the 50 EMA as take profit 1, and mayo, which is take profit 2, the 200 EMA. All right, guys. So I hope that allowed you to see just a good pool of samples of what you're looking for when I talk about trading the edge. Okay, again, all it is just basically when the formation, either type 1, type 2, or type 3 setup happens really early in the Asian session. Okay, the most powerful ones are M's and W's. First leg of the M forms during Asia, second leg of the M or W forms literally right outside of the Asian box. Okay, those are very powerful formations, and you can take those for some good trades as you see. Okay, so I want you first to just concentrate on if you can find the Asian session M's or W's. Okay, because those are going to be the easiest to spot, and those are going to be the most powerful ones that we've seen so far out of all the different formations. Okay, so I hope that this video has brought a lot of good knowledge to you when it comes to knowing what trading the edge is. And if you have been able to catch any of these trades at all before this video, comment below, let me know. Let me know if you like the content, guys. Give it a like, share the video. Obviously, it lets me know that you like the content, and I can keep doing this content for you guys. All right, thank you so much for watching the video, guys. Until next time. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.